The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the February 2nd, magnificent Monday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Talk about perseverance. How about that Super Bowl game last night? Well, look, I think just like they do, I believe that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. I know I did, and it's great to be back with you. Let's make sure that you and I, that we do everything we can to have an extraordinary week. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. Yep, that little shift, that little 2x4 shift out there, folks, it will make all the difference in the world, because it means that you will be able to find the gift in every set of circumstances that the universe is going to throw at you. That's why we trade these markets, because the universe is always throwing circumstances at us. So it's up to you and I to go find the gift out there. We'll spend the next couple hours looking for those gifts. I'm absolutely grateful for your presence here this morning. Of course, I'm here to serve you. So if you'd like, go ahead, pick up that phone, dial on in at 877-927-6648 internationally. You can also reach out to us at 727-445-1044. That way you and I, we can go take a look at a stock chart, help answer any question I possibly can. Of course, this is none other than Tiger Financial News Network. It is Magical Monday. I'm Steve Rhodes. Welcome to the show. Right now, Dow futures up 54 points, trading out at 17,151. S&P up 6 1/4. It's trading at 1994. Nasdaq futures up 10 points, trading at 41.51. King dollar up 2 pennies. She's trading out at 95.02. We'll check out the soft currency market. You know, those dollares. We'll take a look at the hard currency market. Gold right now trading back about $11, trading at 12.68. Silver down 13 cents, down at 17.07. We're going to look at light sweet crude for sure. It's trading up $1.20, trading out at 49.43. There may be a change in trend, at least short-term change in trend that is occurring out here. Well, you can take a look at natural gas, back 4 cents right now at $2.64. Of course, what we like to do as we open the show is just take a look around the globe, see what's going on inside of the indices out there. Last night over in Asia, a sea of red. You had the Shanghai off 86 points. That was down 2.5%. Hang Seng off 22 points, basically flat. The Nikkei down 0.6%, down 116 points. And in Europe this morning, we've got the FTSE and the DAX. The DAX is up 52 points. Let's go take a look at the DAX. Strong like bull out here. Absolutely strong like bull. We have not seen a reversal signal in quite some time inside of the DAX. The DAX is trying to get up and stretch its arms into that 10,957 level. That's another 200 points north of where it's trading right now. It's trading at 10,747. The reality is the DAX wants to still get up to the 11,429 range out here, at least at this stage of the game. No bears in sight inside of the DAX. If we take a quick peek here at the FTSE, up 16 points this morning. The FTSE just taking a little time off after making that 1-to-1 A to B equals CD to the upside out here. The FTSE has a little bit more bearish look to it. When I say bearish, it just simply has a level of resistance that the DAX does not. That resistance, that's the January 27th high. That's at 68.64. But if it can clear that cliff, well, it's got another one that it's got to clear, which is just above it, the 69.05 to 69.43 level. That's inside the FTSE. You and I, we are paying very close attention to the European markets, especially the FTSE, because if it can break above that 69.05, that will be very bullish, at least for that index, because it'll be breaking through a longer-term consolidation pattern. And that's something we want to go ahead and keep our eye on. If we take a look at our markets, a little topsy-turvy January out here. But you know what I am going to do? Let's do this. So I'll switch over to some other charts. Let me get to a different worksheet. But we're going to go take a look at, let's just look at a short-term chart for the S&P futures, try to get a feel for what we should be looking at there. So I'll switch over here. So I'm going to do that first. I think. Let's see. Okay, let's start off by here's the chart for the ES Mini for the third. And this is a 30-minute chart out here. Now, what we can clearly see, line of demarcation, so to speak, what we can clearly see is this descending price channel. Those are the red. That's the red, thick red lines going from upper left to lower right on my screen out here. We can see that even last week on let's see, this was on the 30th. You know, there were some big moves and big reversals inside of the market. We saw the ES Mini at about the 2 o'clock, between 2 and 2:30, make its way all the way up to the 2006 level. And then, boom, stopped right in its tracks. Now, volume on that next bar, really kind of wide-ranging, but only 143,000 contracts to the downside, 122,000 contracts to the upside. You know, basically a flip of the coin out there. We're not going to get too caught up into the volume pattern there. But what we can say is that what that move did was it really helped to solidify this descending price channel. If you're just listening to us on the radio at TFNN.MO or at TFNN.MOBI, thanks so much for doing that. Of course, all of our friends listening in the Seattle had the game won. Absolutely had the game won out there, and what a wild ending! Really, the last minute of play out there. What a wild day! What a great Super Bowl to watch. Even I thought, you know, I'm not much of a halftime kind of a guy out there. The halftime shows I've always thought have basically been pretty lame. So to speak, but last night's reminded me of more of kind of like an Olympics type of a Olympics opening. I mean, man, to talk about I don't even, I've heard what's her name, Katy Perry. I've heard her songs, but it's not like I'm a fan or anything. Not that I'm just, she's. But anyways, what an amazing halftime show! What an amazing halftime show! I thought the amount of dollars that Pepsi or whoever put into that show, that's pretty incredible. And anyway, we'll say let's take a look at this halftime show, and that is the S&P futures out here. So, what happened on Friday maybe had more meaning with regard to helping us to identify what's going on inside the S&P futures as we speak right now. Now, the reason I say that is because this descending price channel is really significant. It's a real significant barrier out here. So if we take a look at the S&P futures right now, they're traded at 1996. Look, this is a 30-minute chart. So I can't tell you at what time this bar is going to, or the top of this channel is going to get hit. I can't even tell you if it does. But you want to be paying attention to it. So this is something you'd want to go ahead, in my opinion, and go ahead and put this on your chart patterns that you're looking for. Look, if it happens during the open here, so as the 9:30 open, 9:30 to 10 o'clock time frame, you're looking at price probably getting up around the 2007 area out there. But here's the point. If we see at any point in time a break of this to the upside, come back and retest it, stays out of it, that's going to be your first indication of a change in trend. Until then, the trend, without a doubt, is still to the downside then. So it's going to have to be the ES Mini. Probably we can do this with the other futures contracts, but I'll say we'll just stick with the S&P futures. We can see we've got our TAS market profile resistance out here. That's at the 2,000 level. So that's another area of resistance. But I will say that the real area of resistance is going to be the top of that descending price channel out there. And that is inside the 30-minute chart. It'll be really the same pattern for the most part inside of a daily chart, but we'll leave that. How about that? Saratoga Springs, New York, getting just hammered, looks like, with snow out there. I don't know, is our man Bob from Saratoga Springs, New York? I don't think so. But can't be. But he goes out and rides a bike. You can't ride a bike in that. In any event, out here, S&P futures should run into some resistance in that 2007-ish type area. So that's what's going on with that. That's really all that we need to focus on there. Okay, so what's the next area that we want to go take a look at? Let me switch back here to the main view. I just was sitting in the chair, in the captain's chair, and I heard John Logan, who kicks us off each morning. I heard him just talking about light sweet crude. He didn't totally get to it, I don't think, at the end. So let's go do that, because when we take a look at light sweet crude, this is perhaps one of the spots that is setting up a trade for us. Like the last thing I caught was he was saying something about And I think, clearly it was the market profiles that he was looking at. So if we take a look at the market profiles, just an example here, let me do this. Let me come to the chart here, and let me turn a couple things off. Now we'll turn them on. That way you can see what it is that we're looking at. So let me turn this off. Okay. So now I'm not going to put words in his mouth, but here's one thing that we can look at from a pattern standpoint. If we look at the light sweet crude and we come all the way back to you've got to get all the way back to June of 2014, the last time that we saw light sweet crude on a daily basis close above a market profile high. June 9th, 2014, the price there was 96.80. The low was about 95.72. Otherwise, ever since the highs out here in July, out at the $100 price range, what we have not seen, for the most part, is a close above a market profile high. Maybe you saw it for just a smidgen of a time on August 29th, maybe just a smidgen of a time on September 3rd, but that pretty much was it. Well, as we're speaking right now, what we can see here is that price, that, and by the way, that market profile high is 48.78. You've got light sweet crude trading at 49.65. Is that a break? No, because it's a daily chart that we're looking at. So one of the numbers you want to put down on a pad of paper with regard to light sweet crude is 48.78. Is this the bottom? I don't know if it's the bottom or not, but it is a potential trade that's out there, and it is a potential early sign of a reversal inside of light sweet crude. That would be one way to take a look at it. There's another way. You don't have your market profiles. That's okay. Steve is going to give you another way to go ahead and take a look at it. Just put your 13-period exponential moving average line inside of light sweet crude. Of course, I'm taking a look at the current contract. What you will also notice here is that we have not seen light sweet crude close above this level. There's been just a couple smidgens, only really two, but we haven't really, for the most part, seen light sweet crude close above this since July 2nd, 2014. There was a slight close above that line back on August 29th. That happens to be the same thing as at the market profile date. There was a little bit of a close, it looks like, above it September 16th. But for the most part, this area has acted as resistance. As we take a look at Friday's closeout here, I don't know if there was some kind of short covering rally. I don't know what it was that actually took place out here. It doesn't really matter. What we do know is this, that we are now seeing, in fact, in this morning as we speak, that line of resistance, that 13-period exponential moving average, which right now is priced out at 47.39, what we saw on Friday was a close above that. What we've seen today is basically a test of that area and a rejection. So we've seen a test and a rejection. So I would have to say today, if light sweet crude closes above 48.78, it is a indication that there is at least some type of rally that could unfold here, some type of dead cat bounce. Now, and because of the decline out here, what you're also talking about is if you went all the way to the, looks like, let me see, it looks like June 25th might be the high out here, right around $100.52, down to the low a couple trading sessions ago. What you're looking at is, I'd have to say a minimum of probably $65, and you're trading at $49 right now. So 50 to 65, $15, that's like 30%. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures right now up about 63 points. S&P up about 8 as we speak. Let's go take a look at Goldilocks as well. We were showing light sweet crude in the last segment. We started off taking a look at the 30-minute chart for the S&P futures, which helped us to identify the current trend channel that price is traveling within. So we got a real nice solid channel out there, and we're going to be able to identify where resistance is or whether or not there's going to be some kind of a breakout. When we take a look at light sweet crude, we're just taking a look at some fairly simple patterns out there. Simplicity kind of makes things easy. It makes it really easy. You don't get too cluttered out there. So we're beginning to see what looks to me like a change in trend out there inside light sweet crude. Now, that figure that we looked at, by the way, the figure that bounced to $65 out here, that's really just nothing more than a 0.382 retracement coming from the high back in June to the low here just a few trading sessions ago. Doesn't mean that price has to get up there, but that would be basically your normal target. And if you really look for, the other target is just simply, looking on a chart and trying to see what the bounces have basically been. But we haven't seen much in the way of any kind of bounces here. What kind of retracements inside side of Lake Street Cruise, seeing like $4 or $5 moves out here. Well, if we $8 move, maybe the max since those highs. The low is 44.08. You're at $49, so 44 plus 8, $52 maybe out here. But I would say the using a 13 period exponential moving average, as well as John Logan's market profile, I think that's going to be helpful to give us a clue. Doesn't mean the trade would work out, but it is something worth paying attention to. Now, in the case of Goldilocks, let's go back here and take a look at gold. It was down about $10, $11 as we speak right now, trading out at $12.68. Gold's got its own pattern out here. In fact, let me switch over to this one. I let you guys in on this one last week, guys and gals, I should say. And the chart that we've got on my screen out here, and yep, our man Z just posted inside the den, it's the full moon. Today's February 2nd. Tomorrow is the full moon. Now, if you're watching us on Tiger TV, what you see here is the continuous contract for gold. That way I can take it back a little bit further. Now, along the bottom of my screen, what you see are really 4 different moon phases. The new moon, first moon, full moon, and the last quarter. We're really focused on the full moon. So it's just the hollowed out circles here. And you can do this on your stock chart. It's pretty easy to go back and take a look at full moons. Full moons tend to be initiation moves inside of gold. I can't tell you why. And I've studied, when I say I've studied the different planetary alignments and different lunar phases out there. What I mean by that is I've taken all of those that have been identified by cycle specialists, and I've applied them to the stock chart. I've applied them to the Dow primarily, not only, but the Dow. But I have applied them to the Dow and to metals and to other elements. You can take a look at grains as well out there, where they seem to have the most impact. And one of the most consistent, like I can't tell you why, is the full moon. And the full, with regard to gold, just with regard to gold specifically. That doesn't mean it doesn't impact other things, but it has the most impact on gold. And it doesn't have to really mark a swing point high or swing point low. What you typically find 9 times out of 10 is that it forms an initiation. And oftentimes, though, you got to look for other patterns out here. And it's an initiation to the upside or the downside. Hey, you don't have to be a genius. What it does help you do, and I love how John Logan talks about eliminating one side of the trade. Well, when you're trading around a full moon inside of gold, if gold takes off against you, it's something to really pay attention to. Go mark it on your charts out there, and you want to make sure that you understand other patterns inside the marketplace. The last time we had a full moon, it was right here. It was on the trading session of January 5th. In January 5th, we saw the market, in essence, with regard to gold, make a low. What did it do? It made ended up turning into 1.2728 to be equal C to the upside. It did that, gave you a reversal candle, bearish engulfing here on January 23rd, a bit lower low on January 26th. And if we take a look at gold now, it has its own version of a descending price channel out here. And this is on a daily chart we're looking at. And what we can see here is gold runs right into resistance. We've got 3 points of contact right up at these highs, as well as gold has some points of contact already established down at the low out here. So ideally, tomorrow, you see gold pull back to the bottom of this price channel. And that would actually then bode well for the bulls. Where's that price level at? I don't know. Tomorrow, and maybe somewhere just north of 1239. You're trading at 1268 as we speak right now. But tomorrow is full moon. It's something we want to pay attention to, especially when it comes to gold. 877-927-6648. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 32 points. Trade out at 17,198. S&P at 2,000. It's up 5 points. The composite is up about 8. Trade out at 46.43. Russell 2,000 up 3.5 points at 11.68. DAX up 43. FTSE up 10 points. Gold back $9.50 as we speak right now. Light sweet crude up 57 cents. Lead the charge to the upside is Bluebird Biotech. It's up 4%, up $3.67. EOG Resources up 2%, up $1.77. Alibaba up $1.60, trade out at 90.79. Royal Dutch Shell up $1.64. ConocoPhillips up $1.60. Hess Corp up $1.30. Apache Corp up $1.30. Boy, a lot of Schlumberger up $1.40 out here. ExxonMobil, they were out with their earnings before the bell. Before the bell, the XLE up $1.02 as we speak right now. So that's got to be powered, well, by all those, and certainly ExxonMobil. Don't know what that's doing, but we'll check in on it as long as I remember. To the downside here, you've got the TRW Automotive Holdings, TRW is the ticker symbol, down to about 2.5%, down $2 and change. You've got Moody's Corp down a couple of bucks. Pitney Bowes off $1.60. Boeing is down $1.79. Cardinal Health, CAH off $1.16 as well. Let's go check in on the currency pairs out here and see what's going on out in that world. And as we look at, let's start off by taking a look at the euro US dollar. So if we look at the euro, it is trading out right around the $1.13-ish level. Let's put the chart on our screen. Haven't really had much of movement out here inside of the euro. Just been trading sideways, which it's really been doing is working off an oversold condition out here. So the euro, it's got some decent support. Decent is about that could be given it maybe too much. Too much positive, but it's got some decent support down at the lows from January 26. That's going to be at a price point of $1.10 basically out here. So the euro at this stage of the game, really not sure what to do about Mario Draghi and his comments in the ECB. What we do know is since Mario's comments out there, the euro has not fallen apart. What does that mean? I don't know. Are we seeing much in the way of really bullish action inside the euro? No, we are not. And that really, if we take a look at the euro versus the Japanese yen currency pair, this is the currency pair that tracks our stock market better than anybody else. Really the same kind of pattern out here. This made a 1.272 butterfly. That did that on January 26. A little bit of a piercing candle there, a little bit of follow through on the very next trading session, but it's been unable to break above the body of the candle from the January 26th, January 20th. Third session out there. I know I can get it out. I can spit it out. And that's at $1.30. No, that's $1.34, 134.64 out there. And that's what the euro yen really needs to get above to start moving to the upside out here. If we look at the Great British Pound right now trading out at $1.50 and just a bit of change out here. If we look at the Great British Pound, it had the best move off of the low from January 23rd out here, but basically, it's given that up, and we've seen a test of the swing point. That's it, January 23rd swing point. No volumes or anything for us to pay attention to. There is a decent bottom that should have been in place, at least a decent bullish pattern in place for the Great British Pound. And that's when it was making a lower low. It was doing that on January 23rd. It was doing it with less relative weakness out there. And then you got the bullish reversal signal right here on January 26th. So nothing more bearish than a failed bullish pattern out here. At this stage here, the Great British Pound does have a bullish pattern. If, in fact, it fails here, let's take a look at a longer-term chart. Let's just go put the monthly chart up on our screen just to take a look and see where it is that the Great British Pound could be traded. Boy, take a look at this consolidation action from $1.70. That takes you really back into the time frame of August of 2009, and it's been consolidating, from there. But the flows have been in a consolidation for the most part since July of 2010, and that's where it's really trading into right now. If it fails on that daily chart, what it really says to me, more likely because you're trading into the January 1st, 2009, this is a monthly chart we're looking at, that you would likely see a move down to the low out there of $1.35 inside of the Great British Pound. Be a good time to go head over to London and check out, do a little pub crawl out there, because it would be a little bit cheaper than it has in the past. Let's go take a look at some things here that are moving and grooving. Let's take a look at the XLE. Let's take a look at the energy sector, and we'll look at some of the stocks in there just to get a feel for what's going on. So here's the monthly chart for the energy sector. Certainly did not do anything, did not bode well for itself in the month of January. If anything, you had a monthly hammer candle down here inside of the XLE. That low, by the way, was from October, which was down at 77.51. You actually closed below that low here in January. The close there was, 75.55. So there's your monthly chart for the XLE. Now the monthly chart for the XLE, it most certainly has broken its trend. So if we take a look at that trend line out here, we'll just take that off of the lows. You'd have to say, come on, work with me. I think I'm having a little bit of a data connection issue out here, so my apologies for any speed issue. But you'd have to say that that becomes the trend line on any kind of a bounce inside of the XLE. Now, that's the monthly chart. Let's look at the daily chart, because things are going to change on a daily basis before they're going to change on a monthly basis out here. So what do we know about the daily chart here? For the energy sector, you know, it's got some pretty stiff resistance. That's at the downdraft from November 28th, where there were 42 million shares. That's at a price point of 79.58. So any close above the TAS market profile high, that's at 77.15. You'd expect the XLE to find some resistance at the, where is that again? That's $82 even Steven type level out there. Now, let me go look at ExxonMobil. See what ExxonMobil is doing, because this is the single largest weighting inside of that sector. So Exxon out with numbers before the bell out here. What we know about Exxon is the following. Let me go ahead and put this line across the screen out here. ExxonMobil has really two swing points for us to for us to pay attention to. The first one is going to be October 15th. Significant low in our market, right? October 15th, 24 million shares down at the price point of 86.91. Now, 24 million shares was greeted with 24 million shares, and price closed below it on December the 12th. You had 21 million shares on the 15th, and you had 26 million shares on the 16th. Well, it's the 16th that is also an important swing point here. That low, by the way, is 86.19. 26 million shares were tested back on January 29th with 22 million shares. So we did have lighter volume, and you did have the formation of a hammer candle on the daily chart. So what the daily charts are communicating to both you and I is that ExxonMobil, or is at least finding support and is trying to find a bottom down here. Now, I don't know if that bottom is going to hold, but for those of you that are interested in trying to add ExxonMobil into your portfolio from a longer-term standpoint, maybe from a dividend play out here, this is not a bad place to at least give it a shot and have a stop in place. You got to have a stop, because any close below, I would say, below that hammer candle from January 29th, the low there is 86.03. You're only trading at 88.18 as you speak right now. So there's not much in the way of, if you're trying to buy the bottom tick. Now, I'm not saying to take this trade. What I am trying to provide you with is some signals, candlesticks, tests of swing points. And so far, in the case of ExxonMobil, it is really trying to hold this low. Let me put this on a weekly chart. In fact, let's do that before we even draw that conclusion, because what was going on the weekly chart as we tested the swing points last week. So let's wait for this to populate. There we go. And as we take a look at the weekly swing points, now back in October, October 15th was the end of the week, and there was 105 million shares down there. Now that level was actually tested with only 99 million shares back in December, and back here on the December 15th, beginning of December 15th, the move out of there was 132 million shares. So you had a test, not a rejection of price, but you had a test that week that began December the 8th. But what we also had was we had a bit of a move higher. Now, this level here, from the week that began December, the weekly chart was 99 million shares. And last week, 86 million shares. So even the weekly chart is testing a swing point in the case of ExxonMobil with lighter volume out there. So, and you're all the way, and if price fails here, you've also, take a look at this. How about the weekly chart? Whoa, I just lost, that was interesting, say the least. Geez, I hope you can hear me out there. But of course, I'm looking at a blank screen, and blank screens become very difficult. Okay, good. Val's got me. Great. Blank screens become very difficult for even the best of us technical analysts to really provide you with what's going on. Now, I'd have to say in the case of ExxonMobil, now our blank screen is back. There we go. 85.06. If we see a price below, a move below 85.06. This is the weekly chart that we're looking at. Then it's probably trouble out there. It's probably significant trouble. And so ExxonMobil is trying to, it's in an area where it has basically bottomed out for ever since going back. Let's see how far we go back to this level here. This takes us back to July of 2012 out there. So I don't know if it's going to bust through there. I just know there's level of support that you could pay attention to. So that's what's going on inside of ExxonMobil. Sorry for the long-winded view of that, but nonetheless, hey, it is a view. Speaking of views, let's go take a look at Apple out here. Let's take a look at Apple. It's traded out at 117.75. As we speak right now, Apple was moving up into its swing point with some volume last week, but this is a weekly chart. So let's go see what it was doing on a weekly chart. Weekly chart here, stronger than daily. So the week that began November 24th, probably Thanksgiving time frame, nonetheless 181 million shares out there. And last week, what Apple was doing was moving up in that area with 465 million. Hey, Thanksgiving or not, it really doesn't matter. Apple was moving up into that level with volume, pushing that area with volume. That says that the highs ought to be tested again. It did not close above it. That high, by the way, was 119.75. But you ought to see price go test that. So on the weekly, hey, let's take a look at the monthly. What we're doing on a monthly basis, of course, I've got to pray here that this thing actually populates. There we go. On a monthly basis, the month of November was high with 820 million shares, and last month 1.3 billion. So Apple pushing into those highs, whether it's monthly, whether it's daily, whether it is weekly out there. So now if Apple gets above that level, there's a large A to B equals CD to the upside, and I do mean a doozy of an A to B equals CD to the upside. Now that will bode well for the QQQ ETF out here. And that A to B equals CD inside of Apple would take us into a price level of 129.20, probably more likely 135.88 out there. But that would be your price target and your price range. The key level to be watching inside of Apple is going to be 119.75. Let's take a look at some other things here that are moving to the upside, to the downside. You've got Pioneer Natural Resources, PXD is the ticker symbol. That's our leader in the clubhouse. That's up $6 and change, up 4% this morning. Let's go see what Pioneer Natural Resources is doing. Pioneer Natural Resources is got a little bit of a supply line issue that it's dealing with. Right in the 160-ish range. There was a volume to the downside, a gap down on November 28, 3.3 million shares. This morning, you've done shares in 17 minutes of trading. So say at 216 million, it's trying to push in that area with volume. That would be into the false assumption that will continue for this pace on a straight line basis. Nonetheless, 160.50 is the level that you want to be focused on and paying attention to inside of Pioneer Natural Resources. If it can break through that level, if it can repair that window, well, then it'll be changing. Look at changing polarity, and that means that the 160.50 then ought to be support. That is ticker symbol PXD. If we look at the Canadian Pacific Railway out here, I believe that's CP is the ticker symbol. That's up $4 and change as we speak right now. It's running into its TAS market profile resistance area. That market profile high at 180.16. A sideways movement here for a couple of weeks. What else can we see on this chart? Let's pull this back just a tad. Yeah, it would be so much more helpful if this thing. We can see a clearly looks like a descending price channel out here. That channel, let's go try to draw that in our charts out here. It's probably right along these lines here. So this equity, look at where it can also find resistance. Let me just go ahead and move this up. This looks to me to be the price channel that it is traveling within. This says that it should have some resistance right around the 190-ish area. Happen to have this little shooting star candle that was on January 22nd. The top is 189.89. So it's right around that 190 level. That ought to be resistant. Ticker symbol CP. Breaking above that would be a change in trend, potential change in trend. Looking at things here moving to the downside, let's take a look at Google. She's the leader in the clubhouse to the downside, off about $1 right now, down to 1 8/10% out here. Again, this is the daily chart on my screen. We take a look at Google. Out with their earnings were last week. And I'm assuming it was on January 30th. Moved higher with 5.5 million shares. I don't know why that switch is not turned on. I'll try to turn it on here during the chart, during the breakout here during the chart. What the heck am I talking about? Dow's up 18, S&P up 3, Composite down 7 points, Russell off $1. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow is off 18 points right now. S&P's down 1.5. NASDAQ Composite off 22, mostly being led here by Google, I would believe. We saw Apple to the upside slightly, Google to the downside by $9. And others, you've got the Russell's off 3 points. Russell was weak on Friday. You've got that continued weakness here this morning. New York Stock Exchange actually positive. So of all the indices, the only index here that is to the upside, up 13 points, and you got net advancing issues out there. So the wider swath of the market is not necessarily buying into the sell-off this morning. Nonetheless, and if we take a look at the New York Stock Exchange, and I do say nonetheless, the price oscillator is down below the zero line. So the summation index has turned to the downside. We've seen this little tug of war go on inside the New York Stock Exchange for the last several days out here. A very choppy market since the January timeframe. But this says that the sellers have control of the market out here inside of the New York Stock Exchange. So you got to go with the price oscillator being below the zero, in my opinion, summation index being turned down, to tell you who's really in control as we speak right now. Will they hold on to that control? That I do not know. If we take a look at the NASDAQ composite, its price oscillator as well is below zero out here, so that says that sellers are still in control. Now, sellers, let's put this in perspective, have basically not been able to do diddly squat. That is a technical term for those of you not familiar with it, and what I mean by that is if you go from the low out here, that's the low from October 15th, all the way to the high that was put in here inside of the NASDAQ composite. I did that with a straight face, by the way. I don't know if you caught the straight face. That was at the highest at 48.13 out there. What we can see is that the sellers have only been able to get price down to the 0.302 retracement inside of the NASDAQ composite, 45.48. You're at 46.15 right there. If that's all that can be done, and if, in fact, we see a bottom that forms in the market, which it should do, still on pace to do that out there, but there are some chinks in the armor out here, and that means the month of Friday chart is frozen. No, that's me that's frozen. I don't know. Do you see this chart here? I'm moving around there, Al. Maybe I'm having, it looks like we're having a bit of technical difficulties out here, so not seeing. Okay. Well, folks, I'll just describe to you what it is I'm look at here, and we'll see if we can get these technical issues solved during the break here between shows. But basically, if you go from the lows of October to the highs here in December for the NASDAQ composite, it has only been able to make a 0.382 retracement. It did that back here in December 16th. And so it's an important low to get to hold. Do you see a close below 45.48? I'm not talking 45.47. I'm saying a decent close below that number. Then you're looking at a normal retracement, which would take you back to the 0.618 area, which is 43.83 out there. So basically, along the lines, whether it's a composite, New York Stock Exchange, if we take a look at the New York Stock Exchange, we're going to find something similar. However, I should take that back. If we go from the October 15th low, what the New York Stock Exchange did was back in December, it got down to the 0.618 retracement level. At this stage, price is well above that area. That is 10,337. You're at 10,554 as we speak right now. So all in all, still not too shabby. But when we get back from the if you're staying with us for the next hour, hopefully what I'll do is we'll get my charts up here. We'll take a look at some monthly charts because there is something that is ominous out there, and we want to go ahead and make sure that we highlight that, and that makes the month of February very important out there. So we will do that. If you were off to start your day, as always, thanks so much for joining us here at TFNN. Have a great Monday. Have a magnificent Monday, and look forward to seeing you soon. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.